acceptance policies and why we keep hitting on this all year this year. So that's what our agenda is. And because we're providing CPE for any of you who require it, we are going to ask you to fill out some polling questions. So Teresa, do you want to skip to that slide? Okay. So polling question number 1. What would you consider your current understanding of cryptocurrency and digital assets? And if you all wouldn't mind filling in the blanks there, I'm here to learn the basics. I have some general knowledge. I have a solid background, and I can't, or I'm an expert. Give you all just a quick second to throw that in. This isn't a test. We're just trying to get a feel for, where people are in their knowledge and understanding here. Thank you all. Okay, so I'm here to learn the basics, 70%. That doesn't surprise me. We've done some other cryptocurrency things within the firm, and we do have a cryptocurrency and digital assets niche here as well. And I think that's the kind of responses they're getting in a lot of this. I appreciate 20% of a solid background, and we have some general knowledge, but no one wants to come up and say they're an expert. That doesn't surprise me either. And I'm not an expert. I don't think anybody really admits to being an expert at this quite yet. And that's okay. Okay, so let's get into it. Brian, you want to kick us off with the basics of the terminology?
Absolutely. So I'm going to take you through just a couple of quick definitions here on the next slide, and just kind of give a brief overview of what those are. So coins, this is your basic digital asset. So there's different types. There's Bitcoin. I'm sure everybody's heard of that, but there's also Shiba coin, there's Ethereum, there's all types of different coins that are basically the asset that you see it online. It's a digital asset. So those use cryptography to secure those transactions. So you're able to transfer coins back and forth to organizations, people to transact business. The wallets are what store your key, which allows you to make transactions. And those keys are, there's a public key and a private key. And the public key is what you would give to someone to allow you to transfer assets back and forth. The private key is what proves that you own the assets that you own, the coins that you have. So your wallet is what stores those keys, and then that allows you to transact within the crypto universe. And the next one that I want to hit is blockchain. So what is blockchain? That's a common question we get a lot. And it seems daunting, but it's actually fairly straightforward. It's a digital database. It's a ledger of activity that's distributed among nodes. And the nodes are the users, the computers that are on the network. So the easiest way, the most, I guess the analogy that I've heard that seemed best for me was if you had a remote village that used rocks as currency, and each time a transaction occurred where somebody was transferring a rock to someone else, the group came together and everyone agreed that that transfer occurred. So everyone knew how many rocks you had at any given time. So in order to convince, or if I stole somebody's rock, I would have to convince 51% of the people to agree with that I took that. So basically it's a mindset that all the nodes agree, so you can't change what's been written to the blockchain. So as things are written, information comes together, is written in a block, and then all the nodes agree and it's added to the block. So that cannot be changed. So it gives you a history that cannot be changed, and then you can go back and look at transactions that occurred without the fear of, did that really occur or not? It's a secure transaction, and you see the keys, but you don't see who owns those keys. So it's also anonymous to a degree. You can have all types of chains and blocks, but that's kind of the overview of what a blockchain is.
So I'm going to pick up from
Did
there.
you have anything to add?
Yeah, I'm going to pick up from there, and I'll cover the last two as well. So, and I've, Brian just said it exactly right. There's an anonymous feature in this world, and there's a public feature in this world, which is why it's a little weird to understand. But when we as accountants and business advisors, and I think people in the business community, I'm fascinated with blockchains now because there's something quite interesting, and I said this before in our when we were planning for this, kind of beautiful about the fact that the transaction executes in accordance with what we would call a contract, and that's what it's called sometimes in this world. So if I'm going to buy 5 Bitcoins from Brian, and he's going to sell them to me, once we set up that contract to make that transaction happen, it transacts and executes when we agree it, and it's solid and it's locked on the blockchain, so to speak. And what's nice about that from a business, just let's take it back to widget maker accounting. There's no accounts receivable. There's no invoicing. There's no 210 net 30. I don't have an accounting clerk that has to call the customer later and get collections on that. And as all you not-for-profits know, I'm not putting the development people out of business, but if we have pledges that are executed on a blockchain, for example, they're going to be executed and confirmed and transacted in accordance with the wishes of the donor and the end organization. And there's something kind of neat about that. We have not worked out all the bugs, and in a little while we're going to talk about all of the risks. But just from a general business transacting perspective, that's kind of an interesting concept, and that's why we're seeing it take off more and more and more. So the next terminology is metaverse, and guys, I'm not an expert at this at all, but it's a fascinating term. It really has to do with this entire subculture, I'll call it, that is existing, where all of these transactions are taking place, all of this commerce, if you will, is taking place. So there's an entire world of folks who are buying and selling and trading goods and services, trading coins, that are doing it in this sort of metaverse, this virtual reality space. And it includes everything. It includes gamers. It includes collectors of NFTs, which I'll talk about in a moment. It includes just folks who want to live in this sort of sub-economy. If you all remember back when the internet was coming out in the early 90s and into the middle 90s, when chat rooms became a thing, and people would spend hours and hours and hours living in chat rooms and arguing politics with each other anonymously online. It's got that feel to it as well, this metaverse. So if you think of like Facebook would be or Instagram or whatever would be the coffee shop where social media is taking place. Well, the metaverse is the entire city where the coffee shops exist. I mean, it's one, I keep using analogies to try to give you examples of what this metaverse is. It's a lot more than chat rooms and social media sites. It's really a full-scale virtual economy or virtual reality economy that is in existence now, but we've got some issues there too. There's very little regulation, so it has some reputation maybe for some fraudulent transactions, and we'll talk about those as well. And the last one on here is non-fungible tokens. I'm going to talk a little bit more about some NFT projects that have taken place that have benefited not-for-profit organizations over the past year and a half. But a non-fungible token is a really strange concept. It looks a lot like a JPEG because it kind of is a JPEG, but the way that it's created, usually on a blockchain, is it has a unique signature to it. So an NFT can be, it's like what it says. It's non-fungible, and it's a token. It can be an avatar. It can be a piece of art. It can be a gaming token, your particular card that you use as a trading card, for example. So we'll talk a little bit more about NFTs in a moment. They are dying down a little bit from the hype of about 6, 8 months, 10 months ago. But I think they're here to stay in some respects, and at least the technology that's driving NFTs and driving transactions and driving some philanthropy is hopefully here to stay. So next we'll go on to some of the current accounting rules just for digital assets in general. So Brian, you want to pick that back up?
Yeah, absolutely. So now that you know kind of the definitions, what's the current state and future state? So when an organization receives cryptocurrency or goes out and purchases cryptocurrency, a lot of the common knowledge would say, okay, this is currency, even though it's digital, so I'm going to treat it as cash or cash equivalents or something like that. Unfortunately, that's not the case. GAAP is currently saying that that's an intangible asset. So just like you would have other intangibles, it's recorded as other asset as an intangible asset. What does that mean? That means you have to hold it at cost. So you go out and buy $1,000 of Bitcoin, it sits at $1,000 on your statement of financial position as an intangible asset. You also have to follow the intangible asset rules of testing for impairment annually or more frequent if circumstances come across that you feel like it decreased in value or what have you. So there are some good things and some bad things about this methodology. You always know what your cost is, so you don't have to go back and look, how much did we pay for that? It's sitting on your balance sheet at cost. And as you may or may not know, the price of these coins fluctuate quite a bit. They go up and down every day, sometimes just a little, sometimes quite a bit. So the constant flux is a little bit hesitant to record anything. So you're keeping it at cost, so you're not having to, adjust that quite a bit. Now the cons are you're showing it at cost. A lot of times coins go way up. You can't write up your intangible assets. You have to keep them at cost. So in the current, you buy it $1,000, it goes up to 5,000, it's still sitting at 1,000. So that's a little bit of a con. And if it dips quite a bit, a pro is that you're not recording a huge loss. Well, I guess you will. I'll get to that in a second. So the fluctuations are a little bit of a pro or a con. So testing for impairment. So when you have it at cost, you have to check for impairment, whether it's annually or more frequently. If it dips quite a bit, that would be maybe a triggering event that you have to then test for impairment. And if you see in this example, let's say you bought Bitcoin for 1,000, Bitcoin is now trading and your wallet is now worth 500, that would be an impairment loss. So you have to record that loss, and now your Bitcoin is sitting at $500. So that's a little bit of a con, that these impairment losses are typically made up rather quickly. So if, let's say, at the end of the year it's 12/31, you write it down to $500, and then on 1/5 it goes back up to $2,000, you can't write that back up. You have to keep it at that $500. So the current accounting is bad in that sense, that you could be writing it down at year end for a temporary little dip, but come 2-3 weeks, it goes way back up. You're not writing that back up. So there are some good things and some bad things about how we have it now, but hopefully we think that's going to change. And that's what the FASB is currently looking at. So on May 11th, 2022, they voted to add a project to develop a recognition, measurement, presentation, and disclosure guidance on digital assets. So they focused in, said, okay, we need something that's going to address how we record cryptocurrency, how we measure it, how we present it, and how we disclose it. So we don't know what this is going to be. They're still working on it, but we can just naturally assume that there's going to be some pretty big disclosures on it, disclose what it is, and hopefully brings a fair value perspective to cryptocurrency. So in that case, it would follow your typical investment where you have an unrealized gain or loss that you can record it to just like you would your other investments. And then further, the FASB voted in August that kind of focused in on what it means for digital assets. So they kind of said this in May, we're going to look at digital assets. Now they're saying in August, they said it's going to be, it's going to cover anything that is considered intangible asset. It has to, it cannot provide an asset holder with an enforceable right to goods or services or other assets. So they wanted to focus it in on digital tokens. It has to be created or reside on a distributed ledger, so on a blockchain. It's got to be secured through that cryptography, and it's got to be fungible. So that's what FASB said, that the new guidance is going to focus on things that meet those criteria, which is essentially your cryptocurrencies. So we're looking forward to that. We're staying on top of it, and hopefully soon we can give you some updates that, it will be fair value on the statement of financial position rather than at cost and testing for impairment. So then as you're doing your monthly reconciliations, you can just add that to it and get your price and record it to that. Because most of the cryptocurrencies, the bigger ones, have prices that are pretty agreed upon. So you can go to Coinbase and look at what Bitcoin is trading for today at this time, and it fluctuates, seconds, minutes. So we'll keep you updated on that, but that's what the current rules are, and then what FASB is kind of looking at.
Cool. Thanks, Brian. Yeah, we are looking forward to that. We talk about what is the definition of a level 1 methodology for fair value. It's open current prices in an active market, open prices in an active and open market. And we almost have that now in some sense. Once you kind of get into this space, you kind of understand that it behaves like a market. And so shouldn't these be like our other investments that are on our statement of financial position? But nevertheless, we'll get there when we get there. So I want to shift gears a little bit and talk about these activities. So when we start on the next slide, instead of diving right into this for a moment, I kind of want to go over a little economics lesson or an economics refresher. I'm sure everybody took an economics class in college or high school, and we're in a state right now of tremendous inflation. And why is that? And what is inflation exactly? Well, it's rising prices. What causes it? The layman's definition of what causes inflation is pretty simple. It's too much money chasing down too few goods and services, right? Supply and demand. We've got a labor shortage, or a labor crisis, if you will, kind of going on with as a result of the pandemic. We've got people shifting in the labor market pretty significantly, and then we're still making up for lost territory on the supply chain. And so this causes prices to go up because the availability of goods and services is less, and people still have projects they want to do and business they want to conduct. So, and then we can all talk about the Fed's response to that is, okay, let's cool the economy down for a moment. Let's raise interest rates so that the borrowing of of money is a little bit, so it costs a little bit more to buy things, meaning we'll slow down that economic driver, you slow down the purchasing power, if you will, and let the supply chain catch back up, let the labor market catch back up. Maybe that works. I'm not an economist, but hopefully we can see some results. But if you go back, and the reason I bring this up is let's go back to the actual pandemic itself. The meat of it, 2020, March, April, May, June, July, those time periods where nobody was doing anything. Nobody was going to concerts. Nobody was going to work. Nobody was driving around. People, all we were buying was toilet paper. We weren't buying anything else. When that happened, you have to understand the economy, especially the metaverse now. There's money there. There's coins there, as Brian talked about. There's a willingness and a desire to invest in something. And at that time, and I'll get into this in just a moment, but the non-fungible tokens, for example, had come up, and people were bored and wanted to do something with their money, and so non-fungible tokens became almost a game, a trading platform. They became very, very popular because artists could produce them. People could buy and sell and trade them. But even beyond that, there was an opportunity there during the pandemic where people had an opportunity to start creating some innovation. And I think anytime there is innovation, people had some time off, if you will, some time to think about, how can I work in this space and create new things. I always call them subject matters because I'm an accountant, but new technologies, new innovative things. And I think wherever we have that, we're going to have both investment and we're going to have philanthropy. So I kind of want to bring this home for our not-for-profit friends on the call, that it's not surprising to me that in this sub-economy that I keep talking about, and given the conditions that are out there, that were out there during the pandemic and are continuing to be out there, we're going to have philanthropic drivers. It is really very much a community. It's its own subculture. So I think we're going to have investment and we're going to have philanthropy. I want to talk specifically about some activity that happened last year. And so this is a slide that came from a website. So let's talk about the NFT projects for a moment. I mentioned that the NFTs are these JPEG-looking trading cards. These projects often, again, this is during the pandemic. This is when nobody had anything else to do. They became very popular among celebrities, among, again, investors that just thought, hey, this is a cool thing to do, and there's nowhere else to spend my money. Again, inflation. What can I do that's interesting and cool and innovative and fun? Oh, okay, NFTs. They sound really neat. And so artists, gamers, big sports leagues, the NBA, the Major League Baseball, all the football teams are starting to invest in NFTs because it's an interesting token. It's an interesting marketing piece, and they wanted to get in on the action. So some of these projects that were developed over the past year or two, in order to launch the project and make it even more attractive to investors, they would say, well, hey, let's do a charitable component piece to it too. So I wanted to specifically hone in on a couple of these. Now, these were ranked by the charities that benefited from donations off of the NFT projects. So you have MSF Australia. I'm not really familiar with a lot of these big green pencils of promise, but I'm going to hone in on the third one, the Bored Ape Yacht Club. So if you don't know anything about NFTs, go out and Google Bored Ape Yacht Club. It was one of the most successful NFT projects. Frankly, they look a little weird. They're just these cartoon kind of character looking apes, and they're all very unique. Again, a non-fungible token is a unique token. It's digitally signed. It's locked on the blockchain. So if I own it, the whole blockchain world can see that I own it. They might not know who I am. I can use an alias on my wallet, but they will see that I own this very, very precious piece of art. could be a precious piece of art. Like I said, could be a trading card for a baseball player, could be a cool token for a really wild game that's out. I'm not a gamer, but if there's a game out there and I've got the really cool avatar token, that's what we're talking about. So when they launched that project, the developers agreed to donate a portion of the proceeds to the orangutan outreach. And actually, you can go now that the orangutan outreach, if you were to go pull their 990, that 924,000, first, it's not reported yet because their 2020 990 is out there, but they've been quoted in media articles saying, yes, we did receive these funds as a result of this campaign. And if you look at the 2020 990, their entire revenue for 2020 was only $700 and something thousand, and the prior year was only $500,000. So this one single campaign was greater than a traditional year's revenue for that not-for-profit organization. And when I saw this, guys, it just opened my eyes that, hey, this is no joke. This is a massive charitable driver for organizations. And again, I'm not endorsing having digital wallets or being involved in NFTs or anything. You need to talk with your board. Laura's going to get into all that in a little bit. I'm just saying this activity is going on out there, and it's going on in droves. On the flip side, though, it's not regulated. And so, we're happy to hear that these charities did receive these funds. But let me take it back to the blockchain for a moment. If I set up a contract in a blockchain and I say that I'm going to sell Brian this NFT and he's going to pay me 1 Bitcoin, but he's also going to pay Orangutan Outreach and that wallet that exists on that, Brian, would you call it a node, or I'll just say, let's just use some common language here. The Orangutan Outreach has a wallet and I've got a wallet, and we set up a contract whereby Brian's going to pay me my dollars for my NFT, but he's also going to give a little kickback, we'll say, to Orangutan Outreach. If we set up the contract that way and it executes on the blockchain, that's what happens. Bingo. End of discussion. It's blocked. It's all agreed to. So those dollars, those digital assets, go to those wallets automatically. That's why we think this is so interesting and so enticing. And again, I'm not endorsing getting a digital wallet. I'm just saying that those organizations that do have them and did invest in them could participate in some of these campaigns and some of these transactions in this space. So, looking at the next slide, we're going to switch gears a little bit and talk more specifically about receiving crypto donations, setting up crypto wallets, and so forth. I think we have another, do we have another polling question? Oh, polling question 3. I don't know what happened to polling question 2. Did I skip polling question 2? I'm sorry. I'm sorry if I did. I've got a bunch of screens going on here, but let's go ahead and launch polling question number 3. Are you accepting digital payments? I'll answer for Anders. Okay, we have 100% no. Interesting. We are not accepting them at Anders yet. It is being discussed. Oh, wait, we've got at least some that are coming in at yes. That's great. Okay, thank you. I have in the past year or so had the opportunity to talk with some law firms that are starting to accept digital currency payments. It's probably less popular right now than it was a year ago, but firms like mine are looking at it. Can we set ourselves up to accept them? Should we? So we're going through the same kind of questions that you all may be going through. Let's take a look at some of the issues with respect to accepting digital payments and crypto payments. So first of all, as we've said a couple of times, this is highly unregulated. Frankly, the people who work and play in the metaverse, they kind of like it that way. there's still a subculture attitude, if you will, that hey, this is our space. We created it. We have the freedom to buy goods and services and transact with each other and interact with each other, and we don't have a lot of government red tape. On the flip side, though, government red tape, it can be a burden, but it can also protect investors in some respects. That's why we have an SEC. That's why we have a FINRA. That's why investments are highly regulated, so that the victim doesn't get victimized, if you will. Not to mention that historically, crypto, the whole metaverse has had a bad history with illegal type of transactions. So I don't know if that's going to change, how that's going to change. There are senators and congressmen that are looking at adding layers of regulation, but also looking at keeping that space open and available for investors to participate. So it's a delicate balancing act. It's still very new, even though Bitcoin's been around for I don't even know how many years. But the activity swell that happened during the pandemic is bringing these issues to light. So I think for your not-for-profit, you should be very well aware of the risks involved. As Brian said, if you're transacting on a blockchain and your wallet is set up to receive a donation, that's great. It's not that error cannot happen. Error can kind of happen. It's once we've all agreed on it and it's done and transacted, it's set and it can't be corrupted. But at the same time, I don't want everybody to think there's no fraud, because there's been some studies recently, by things like the Better Business Bureau and some other agencies, that fraudulent activity involving cryptocurrencies tripled over the past 3 years. Now the activity's, gone way up. So it's not surprising that fraudulent activity has happened as well. But at the end of the day, if your organization or you personally are a victim of a crypto theft, there's nowhere to go. There's no policing because there's no regulation in this space. So it is very much the wild, wild west. They are trying to develop some fence posts around it and some regulation that would be satisfactory to everybody. It's good and bad, pros and cons. Some people like it that way. It's their space. Some people want, hey, I'd like to bring more people into this metaverse to be able to do business here. So that's what it is. Going on a little bit further before Laura picks it up with gift acceptance policies. On the next slide, just the basics here. Should my organization consider doing this? All right, number one, check your gift acceptance policy. What does it currently say? Is it completely, and Laura's going to get into this in just a moment. You need to be thinking about accounting, IT policies, and other internal controls, especially if you get a year-end audit, which many of you do. We need to consider how the authorizations are going to take place, what your internal control policies are. Maybe your IT group doesn't want you in these platforms that are buying and selling crypto donations. Maybe they've got some concerns there. Maybe, as Brian said, maybe you want to hold off and wait until the Financial Accounting Standards Board finishes up with a fair value accounting, because, is it going to look crazy on my balance sheet and in my financial statement footnotes if I've got Bitcoin? What are my donors going to think of that? Are they going to think we've just lost our minds? Or are they going to understand, or are they going to think maybe, hey, we're being innovative, we're leveraging out a little bit of our, or adding more risk to our portfolio to maybe hopefully get a little bit more return? Think about what your donors might think of that, to the extent that you get involved. And then last but not least, obviously, these sorts of decisions need to be considered with your board and your finance committee input. And know the risks. We've said it 3 or 4 times. We're going to keep saying it. If you want to move to the next slide, there are some resources on the National Council of Not-for-Profits website about this. And they have some strategies, and I'm not going to get into the details of all these strategies, but there are some strategies to mitigate your risks in having a crypto wallet and receiving donations. The bottom one is the most risky, where you set up your organization goes out onto the Ethereum blockchain and OpenSea or one of these platforms, and you set yourself up with a crypto wallet, and you tell your donors to process the donations right there to that. Obviously, as an auditor, I'm here to tell you I would want to see a lot of internal controls and a lot of process. How long are you going to leave the money there? When are you gonna exchange it for U.S. dollars? What are your policies around that? But you can go all the way back up to the least, I'd say a lesser risky position by using an intermediary 501c3 organization to minimize your legal, accounting, and administrative burdens. There are also crypto donation processors, and there's also a thing called an embeddable checkout experience through a crypto exchange. I frankly don't know a lot about the intricacies of that, but the National Council has some resources for you on some strategies depending on the risk tolerance of the organization. So moving on a little bit.
Jeannie, do you mind if I add just one comment on the wallets?
Absolutely. Yeah.
So one quick comment on using your own crypto wallet. It's important to note that I didn't mention this in my definition, but you can create your own wallet or use a third-party platform to have a wallet. The problem is if you lose access to that wallet, you lose access to your coins. So you're no longer able to prove that you own that wallet and key, and you could essentially lose all of your cryptocurrency then. There's been plenty of cases where people no longer can access their wallet and get to their coins. So that's a pretty big risk that I just wanted to add.
That is a really good point, Brian. Thanks for bringing that up. We can't underscore that enough. The horror stories of the people who had, they got 10 Bitcoin sitting out in a wallet someplace and they can't find, I don't want to say it's as easy as not finding the password, but it's kind of like not finding the password. It's gone. You will not get into that. And if you ever I've set up a wallet and they give you, you have to have this sequence of words to prove that it's your, and if any of that gets lost or stolen or destroyed, good night. You will not get back into that wallet. So that's a really important point. Okay, so as I said earlier, the theme of this year seems to be gift acceptance policies. So I'm going to ask Laura to wrap this thing up in the next, say, 10 minutes or so on our 50-minute hour, and go through where we are with gift acceptance policies and what you need to be thinking about.
All right, as Jeannie mentioned, I'm going to go through some slides on gift acceptance policies. Having a gift acceptance policy in place is considered a best practice for every nonprofit organization from multiple perspectives, whether it relates to your donors or just managing the organization's own risk. It should be written and adopted by the board, and then reviewed annually and updated as needed. And you should also, in reviewing this, consider having it legally reviewed. And if you don't want to do that on an annual basis, at least do it every couple of years. The IRS Form 990 asks whether a nonprofit has a gift acceptance policy and requires nonprofits that answer yes to complete Schedule M. Also, any non-cash contributions and in-kind gifts are reported on the 990 as well. And cryptocurrency is reported on the 990 as a non-cash gift.
Just real quick, Laura, that is kind of at the heart of our problem with fair value accounting, because it's cryptocurrencies have, even though it has the word currency in it, as Brian said earlier, it's not been considered an actual, like a legal tender, right? So they're struggling. That's why it takes them so long to get this into fair value accounting, because it's not considered a financial asset per some definitions. That's why, for example, on a Schedule M, you're going to be calling that a non-cash contribution or an in-kind contribution. So and by the way, folks, even if we get the fair value accounting on the generally accepted accounting principle side, don't be shocked if the IRS doesn't catch up with that, because they've got their own universe of rules and regs that often don't harmonize nicely with generally accepted accounting principles. We hope they do, but they're still using temporarily restricted on their 990 forms, and we've been done with that word for 4 or 5 years now. So just a quick point for you all.
Thanks, Jeannie. Accepting some types of gifts may run counter to the organization's values and beliefs. So a gift acceptance policy can be useful to underscore why the organization cannot accept the gift. Some gifts may lead to legal obligations that the nonprofit is not otherwise ready to handle. Some examples of these may be gifts of real property, raising property tax issues. Gifts of motor vehicles or boats may raise issues about disposal of hazardous waste or licensing issues. Those are just a few examples of some obligations that it may lead to.
Laura, we were talking, I hate to interrupt you again, but this
No,
just
you're
came
fine.
up right before the session. We were talking about this concept that there is some bad press around blockchain technologies for the amount of energy it actually takes to run a blockchain. Because think of it, we're just talking about gigantic computer networks and power. And so we were talking before, we were just kind of, I don't mean to make a joke out of it, but if your not-for-profit organization is focused on global climate change, and you and your board are talking about owning Bitcoin, you got to consider what your donor might think of that if these digital assets and blockchain technologies are, I guess in the media anyway, considered to be hazardous to the environment. I don't know what's true and what's not, but again, these are the kinds of things you want to be thinking about from a PR perspective. And again, your gift acceptance policy can help articulate that. So I just wanted to throw that in, Laura.
Thank you. The organization may simply just not be equipped to either use or dispose of certain types of gifts, such as donations of outdated computers or easily maintained items. For instance, with the vehicles or the boats that you're gifted, or maybe you're gifted, an organization receives a gift of a racehorse. You might not be able to use that, or that's why it's really important to have a policy in place. Next, we're going to go over some things to consider in order to adopt the policy. When you're thinking about adopting this policy and reviewing it with the board, so just some things to consider. One, the audience. Will the policy help guide prospective donors who are considering a gift, or is the policy intended primarily to provide guidance for staff and board members? Some nonprofits adopt a policy for external use with donors, but also draft guidelines to help staff and board members put the policy into practice and make sure it's followed. For maximum financial transparency, consider posting the policy on your organization's website, which this would help manage donors' expectations before they approach you with a potential gift. Some policies specify that prior to accepting certain types of gifts, such as real estate, the nonprofit will conduct a review and/or consult with legal counsel. So just going over that process for accepting gifts. And then another thing to consider is strictly prohibited items. Consider the usefulness in certain situations of a gift acceptance committee as well, or task force composed of individuals with appropriate expertise and experience to evaluate the gifts that are being donated. And then here we're just going to go over quickly, we've got a couple of minutes left, some examples of gift acceptance policies. This just goes over like the name of the first one is the name of your not-for-profit. The organization solicits and accepts gifts that are consistent with its mission and that support its core programs as well as special projects. So for instance, if you're let's just say a child care center, you would accept gifts that support your mission and your core program. So maybe books or things that can be used in the classrooms, but you're not necessarily going to want to accept a vehicle, for instance. Likely won't be used by the children. Hopefully not anyways. Donations and other forms of support this is another example. Donations and other forms of support will generally be accepted from individuals, partnerships, corporations, foundations, government agencies, or other entities, subject to the following limitations. And then you would describe any limitations to accepting the gifts. Gift of real property, personal property, or securities may only be accepted upon approval of, and then the name of the group that is looking at the gift acceptance, the gifts that are being accepted.
I feel like I'm starting to see writing in of digital assets and cryptocurrencies into something like a clause like that may be accepted upon approval of a finance committee. So it gives you an opportunity to discuss with the finance committee if they feel. Now, I've also seen that on the strictly prohibited list, or maybe we're ready to open it up and say, yeah, we're happy to take that type of gift, and we'll try to sell it immediately, like we do with a lot of investment securities. So.
And then here's just a few more examples. So the not-for-profit organization solicits and accepts gifts that are consistent with its mission. So, similar to one of the other ones. Donations will generally be accepted from individuals, partnerships, corporations without any limitation. In the course of its regular fundraising, the organization will accept donations of money, real property, personal property, stock, and in-kind services. Certain types of gifts must be reviewed prior to acceptance due to special liabilities they may pose for an organization. And then one more example on the next slide is that all decisions to solicit and or accept potentially controversial gifts will be made by the executive committee of the board. In consultation with the executive director, the primary consideration will be the impact of the gift on our organization. So those are just a few examples and the reasons why it's important to have a gift policy, acceptance policy in place.
So we're exactly at 50 minutes, which is our hour of CPE. I'll stop for a quick moment and see if anybody, oh, there's our polling question 3. I'm sorry, did I mess up maybe the other one was 2. I don't know. Let's take a look at, is this a separate polling question?
Yes, sorry, I'm typing it up.
Oh, you're good. We'll give Teresa a moment. We want to thank everyone for joining us on this. And if you do have technical questions, send them to Brian. If we will try to publish some newsletters or some blogs going forward if the FASB finishes up its project with fair value accounting on these. It's an interesting topic. We hope it's a little bit of a fun hour for you. We're keeping an eye on this, both as a not-for-profit industry group here at Anders, but also we have a separate cryptocurrency and digital assets group, continuing to keep an eye on both the GAAP compliance, IRS compliance, and things like that. So if you have questions, even personally, and you want to know what happens on my 1040 if I check that box where I've transacted in cryptocurrencies, call us and we can get you the right people in the firm to discuss that. Teresa, do you have the last polling question? And I think we'll be done for the day. Did you have any new information today? Yes. Did you gain new information to take back to your organization? Ah, that's awesome. I love it. Guys, it's really nice talking with you. Join us again. We're going to have another session. I don't know if we know the exact date yet. We'll be sending out an announcement on that to wrap up 2022. So good luck to all of you and enjoy the rest of your day.
Thank you.